Well, great. Thank you, John. And the challenge, besides not being there, is also when you're the third one on a panel, you either have to present something different than the other two or wing it a little bit. So I'm going to do a bit of both. What I'm going to do is really focus in on market access and why that's important for beef producers, what that means for the average beef cattle producer, and then because quite frankly, when I looked at Jeff's notes and imagined what Mike was going to say, I knew that I was very much in line with their thinking on TPP. But I did have the opportunity to go to the round 15, first round for Canada in Auckland. So I'll kind of towards the end, I'll share some thoughts on that. I'm going to go to my next slide. So we should now be going to the one that says CCA priorities. And this is just to give a bit of context, on the type of things that we are working on. Obviously our top priority is to ensure a profitable beef industry. And, Economics 101 tells you that you have to have revenues higher than costs to be profitable. So we're looking at that from the perspective of competitiveness. We're always interested in ensuring that the regulatory environment that we operate in is, as competitive as it can be. We're interested in things like the regulatory cooperation beyond the border initiative between Canada and the U.S. to try and harmonize regulations as much as we can. Obviously, market access, which is what I'm going to spend most of my talk on. Value creation, things like our beef grading, things like our beef information exchange system, which helps farmers understand better, get better information on how does, in terms of the cattle they raise, what kind of beef does it turn into? It gives them feedback on grading information, and they can use that in their breeding program to, over time, improve the performance of their herds. And innovation as well, obviously, can have huge implications for profitability in terms of innovation and research into feed and forage efficiency with what we know feed costs are, and when we have weather events, we're looking for innovation in terms of those things, as well as research into animal health and even how animals are processed into beef. So anything that can help improve the profitability are things that we're overall interested in working on. We also do a lot of advocacy and really in terms of trying to maintain positive public attitudes. We do know that the general public has a very good impression of farmers generally, cattle producers, and one of the things that we're often looking at is when there is things related to animal care or the environment, Meatless Mondays, sort of these things that kind of start to develop in society. So it's really adapting to new societal expectations. And we think, we're in a pretty good shape on most of those things, but we haven't necessarily been all that good at communicating them in the past. So I think this is something that we need to get a better handle on good public advocacy in terms of maintaining markets both here in Canada as well as abroad. And again, that's something else that we have a huge advantage on abroad. There's also just a generally very positive attitude towards Canada in general. People think clean, crisp, cold. Certainly they would not be disappointed with that today looking out. But, they think of, virgin lakes and fresh streams and mountains and forests. And, that's in terms of when we're selling abroad, these are images that we can take advantage of. And of course, every now and then we have a crisis like the Bse in 2003, or the recent XL situation, or even drought or weather issues. So these are sort of overall the things that we're working on. But I'm going to spend most of my time focusing on market access and why that's important. So I'm going to the next slide now. We're showing the size of the beef cow herd. We really have dropped quite a number of beef cows since 2005. We dropped about a quarter of the herd, which also means we're seeing some very good prices for cattle right now. But the thing I really wanted to show on this is so we're going back 40 plus years beef cow herds in Canada, and you can see the cycle. And even if you went back another 50 years beyond that, you would definitely see what we call the cattle cycle. And essentially, what happens with cattle, and it happens with other commodities as well, but it's a little trickier with cattle because of the slow biological process to either reduce or increase the size of your herd. So when you have low herds, you tend to have higher prices, and once you have higher prices, cattle producers follow those market signals, and they increase the size of their herds, often to a point where you then see low prices, and then they respond to those market signals and reduce the size of their herds. But unfortunately, the response is usually too late to take advantage of it. But an interesting thing happened. Typically, the cattle cycle was about 9 years historically, going back. But in the late 80s and through the 90s, once we had the Canada-U.S. Free Trade Agreement, you can essentially see about 15 years worth of growth and expansion. And that really is a very positive response to having suddenly, duty-free, quota-free access to the United States. And only saw a small dip in the late 90s when there was a countervail inquiry in the United States on live cattle imports. But then once that was resolved, we saw the increase pick up again until the Bse Event. And again, so the Bse Event was essentially a trade event where we lost all of our international markets overnight. And what happened is really a very sharp increase in the cow herd, which is actually counterintuitive. That low prices would drive a expansion of the herd, but it comes back to the mindset of cattle producers, where people did not know how long it was going to last. So if you had, an old cow that normally you would cull your herds out in the fall, you'd like to get about 60 cents a pound or more for those, and suddenly cattle producers are getting 15 to 20 cents a pound. So that changes the equation. And if in your mind you think, well, things could be better next year, we'll be through this next year, you're more likely, rather than taking 15, 20 cents a pound for that cow, just to keep her and hope to get another calf off of her the next spring. Well, that's what happened. In 2004 and 2005, we had huge calf crops. So you'll see some of the biggest numbers of calves coming, and we didn't start to break out of that until we had our live cattle trade resume with the United States in the summer of 2005, and then the over 30-month trade resumed at the end of 2007. So you combine that together with the global economic crisis in 08 and 09, and we've seen some very dramatic reductions. Where we think we are now is at stabilizing, so we're at very high prices, so we're kind of at that classic point in the cattle cycle, the low point, so low numbers, but very good prices. And if I go to the next slide, which is just quickly is on heifers, breeding heifers being kept back, you can really, this is the first sign of, is the herd going to expand? As you start to see heifers go back up. And we are just seeing the last couple of years now, people are starting to keep a few more heifers than they had been, but we're still not really there at a level yet where we would see expansion. So we think that we're going to kind of have a bit of a prolonged period of stability in the herd size, probably for about 2 years until we move into expansion. So going on to the next slide, again, I just mentioned that prices are very high, so you should be seeing a slide with Ontario weekly fed steer price. And you see the black dotted line is what the average price was for fed steers in Ontario over the last 5 years. You can kind of eyeball out an average there of around $99 to $100 per 100 pounds. But in 2012, you can see that we were way above the average, with about 114, nearly 115, and just kind of the first couple of weeks into 2013, we're right up there as well. So, we are seeing good prices. That doesn't necessarily mean we're seeing good profitability. So if I go to the next slide, we are looking at what feed prices are looking like. We had a very significant drought in North America, certainly in Ontario, Western Quebec, and Manitoba, and through much of the United States. So the red line is Ontario corn, the black line is Nebraska corn, very high prices, a bit easier on Alberta barley, but right up there as well. This is not likely to change, so from our perspective, the way we have to drive profitability is by opening more markets, getting better utilization of the carcass, and returning more and more revenue to cattle producers, because it's not likely going to come much out of the cost side. So with that, I'll go to the next slide, and now I'm really going to turn into the trade aspect of it, and I'll just jump right to the next one, where you can see you should be looking at a slide that says Canadian Beef Merchandising Guide. And you have a very lot of very small pictures of steaks and roasts and various muscle cuts and ground beef and things like that. That is really what we are producing. We raise an animal, but that animal has to be harvested and disassembled, if you will. So the cattle business, the beef business, is almost the opposite of most other manufacturing. So if you're making furniture or automobiles or whatever, you're assembling inputs, materials, parts, and putting them together and producing a product, whereas in cattle, we're making an animal and we're disassembling it. And to be profitable, we really have to sell each part to the buyer, to the market that is willing to pay the most for it. And this is the thing that was really challenging during the worst of the BSE situation for cattle producers. They saw the very low prices that they were receiving for their animals, yet go into the grocery store in Canada and you would still see that the price of beef was very high in the Canadian grocery store. Well, the problem was that the packer who does that disassembly operation was not able to sell all of these hundreds of products overseas anymore, so not able to get the highest price for them. So a lot of value was just lost, and that lost value, of course, made its way back to the producer. And if I go to the next slide, you can see it's not just about steaks and roasts. There's a lot of other products in that animal. The Canadians let's just say Canadians don't like to eat all that much. So looking at things like hearts, livers, stomachs, lungs, there are markets for these around the world, and you could say, look at a tongue. An animal, a steer tongue might be about 6 or 7 pounds. It might be worth about 20 to 50 cents in the North American market, but in Japan it might be worth $6 or $7. So you can very quickly see that having the ability to export beef tongues, to Japan increases the value of the animal by $30. And if you go through a lot of these products, that's where that incremental value comes from in terms of why exports are so important for us. So going on to the next slide, this is looking at basically what our export performance has been for Canadian beef. This is by volumes, and you can track and see over the last 6-7 years that our overall export volumes have been trending downwards. Now, that's not surprising given the graph that I showed you earlier, indicating that basically we've got fewer animals. We've got fewer cows, which means we have less beef to export. But the interesting thing is that the dollars per pound are going up. So even in 2012, our volume was down 18%. Our value was only down 6%. So even though we have less to sell, we're getting more money for what we do have to sell. And again, so now I'm going to move into the next slide, our top foreign trade priorities. And I haven't got all of the markets on here on the next couple of slides. We do tend to, as we work with Ag Canada and DFATE, and try and enlist their help in opening markets, because ultimately the government folks are the negotiators that need to work on these for us, and we work with the Agriculture Market Access Secretariat. We feel it's important to prioritize because the government only has so many resources. So even though it's not on this graph, obviously our top priority in terms of trade is always the United States. We have a WTO panel decision that we need to get implemented on country of origin labeling, and that has been costing the industry, I think our estimate is somewhere around $630 million per year for cattle. I believe the pork sector came out with their estimate just last week of about $500 million a year. So it's a very significant issue that does need to get resolved soon. But in terms of creating new access, certainly at the top of our list is the European Union. And this, if we can get a Canada-Europe trade agreement with important access for beef, significant access for Canadian beef, that really is a game changer. Because the type of beef we produce in Canada does tend to be that higher value, high end, and we look for high income markets. So markets like Europe, Korea, Japan are very important for us, and we do need to get that better access for them. Now we also know that Europe has certain ideas and requirements about cattle production, including banning the use of growth promotants. And Canada has fought a WTO panel with Europe over that over many years, and I think I'm probably going to say going back about 13 years ago, got a decision, had retaliatory tariffs in place. We have finally resolved that just in the last couple of years by Europe having offered compensation in terms of a new MFN TRQ, and that TRQ was increased just in the summer of 2012. So there's some good access there, but it is still just a drop in the bucket in terms of what it could be. Europe is a beef market of about 8 million tons per year. The quota that we have, that we share with the United States and other countries, is 48,200 tons. And essentially, it really is too small to use. We do need to address some technical issues with Europe. Some of the beef processing requirements, carcass washes, are incompatible between Canada and Europe. Some of the things that we do to protect food safety, to ensure that we are eliminating microbial problems such as E. coli or other problems, we use carcass washes, could be lactic acid, organic rinses, some chemical rinses. They do not allow those to be used in Europe. We feel that the way we do it certainly is much safer than the requirements in Europe. And in fact, the European Food Safety Agency has essentially recommended that the processes used in Canada and the United States also be used in Europe. However, we have run into a bit of a political problem where, let's say, the French, the Irish have realized that if those things were to be approved, that would mean more North American beef coming into Europe. So you can see how we have some tricky issues that we have to deal with, in addition to a very high tariff. So, those negotiations are ongoing. We're often hearing that they're very close and coming down to the end. So we've got our fingers crossed. We're knocking on wood, all those sorts of things, and we think that there's a good deal to be had. And it just now coming down to the political decisions that have to be made to get that done. Access to Korea, we did have a WTO panel which was resolved, and Korea did open its market. It was right around this week last year. The first shipments went over in March. Unfortunately, we really have not gotten the volume into Korea that we would have liked to have had, because about the same time we were commencing our shipments, the Korea-U.S. Free Trade Agreement was implemented. So Canadian beef faces a 40% tariff in Korea, and and U.S. beef was at, I believe, 38.4%, and this year is down to 34.6%. So as that tariff into Korea on U.S. beef drops, we would expect our volume to really approach nothing, unless we can get our own free trade agreement implemented as quickly as possible with Korea and start to regain that ground. With Japan has been following a process for about the last year and a half, and it has been scheduled to complete right around this time. So again, more fingers are crossed that that's going to happen. But really what that's looking at is that we have been limited to shipping beef from cattle under 21 months into Japan, which really makes it challenging to supply that market on a year-round basis. Most of the cattle in Canada, the calves are born in the late winter, early spring, which means if you have a 21-month limit on when they can be marketed, really by the time they are, a year and a half old, from December until about March, we're very constrained in having enough cattle being processed that are under 21 months. So if you're trying to have a long-term relationship with a Japanese beef buyer, and you say to them, well, we can supply you April through November, but for 4 months of the year we won't be there. They're not very impressed with that. So getting that age raised up to 30 months is going to be huge, and we expect we'll probably double our shipments. So I'm going to go on to the next slide, titled "The Importance of Market Access," which really takes those markets that I've just talked about, as well as some others that we're working on. And in China, we actually have the under 30 month. What we're trying to do is get it to bone in. Japan, so as I said, we're trying to get it to under 30 months, and in fact, we would hope that would be bone in as well. Korea, we want to deal with the tariff. Mexico, we have under 30 month access, but Mexico is a very important market for the over 30 month beef. Russia, we're trying to get some bone in over 30 months. We're trying to get some offals approved. We're also trying to get some more facilities approved. And Taiwan, we're trying to get the bone in. And of course, with some of these markets, we also have ractopamine issues. So I think if just to try and be illustrative, we sort of look at what is each of those individual market access expansions worth, and we have assigned an incremental value for each of them, that just out of those 6 there, we're looking at approximately an extra $133 million for Canadian beef exports. So if you take that 133, you add in what cool country of origin labeling in the U.S. is costing, what acetic could be worth, you're talking pretty close to $2 billion that we feel is being left on the table. So I'm going to go to the next slide, just shift gears here a little bit. I'm going to mention the Five Nations Beef Alliance, and this gets into now how do we work to try and achieve some of these objectives. So we have formed this alliance with the Cattle Council of Australia, the Ganaderos in Mexico, Beef and Lamb New Zealand, as well as the National Cattlemen's Beef Association in the United States. And if I go to the next slide, the mission of the Five Nations is to exceed global consumers' expectations in respect to beef production while advocating for trade reform. So that's really looking at what are some of those societal expectations that are emerging for, how animals are treated, how they're transported, environment, greenhouse gas reductions. How can we work on those and also achieve increased market access and agreements? So what we're doing is developing strategies, to look at these sorts of things and increase trade. And the TPP, this is where I come back, that the TPP has really been a very good opportunity for the Five Nations to try and get active by, essentially we put together a Five Nations position statement for the TPP, and we were able to give a presentation on that at the stakeholder session in Auckland. But even before that, what we did, each of our 5 countries, we basically went to our respective administrations, said this is our common position. It involves things like elimination of tariffs without recourse to quotas. But as both Jeff and Mike mentioned, with the existing TPP countries, we already have free trade agreements with most of them, with many of them. many of the countries we don't already have free trade agreements are probably not going to be huge beef markets for us. We don't anticipate we'll ever export much beef to Australia or New Zealand. So for us, a big part of the value of the TPP is the anticipation that other countries such as Korea, such as Japan may join, and who knows, maybe others in the future as well. But one of the other things that we put in our Five Nations position statement is even if we're limited to the existing TPP countries, what about non-tariff issues, SPS issues? Because one of the big problems we face in terms of trade barriers in the beef world is often, even though there are international standards, countries are not applying them. That certainly is the case with respect to BSE, that there is a very good international standard in the OIE, essentially the World Animal Health Organization, which establishes negligible risk countries, controlled risk countries, and undetermined risk. Well, Canada is a controlled risk country, and we should, with that risk status, be entitled to ship all beef from all cattle of all ages as long as we have our controls in place, which we do. So many of the barriers that I mentioned that we're trying to overcome, we really shouldn't have to face because there's an international standard saying we don't have to face it. So our thought was, given that TPP is trying to be a higher standard agreement, the OIE essentially is a guideline. It does have a connection into the WTO. WTO has referenced international standard-setting bodies. But our view is that if TPP wants to be a higher standard, then these guidelines from the OIE should be mandatory within the TPP region. One of the other thoughts we had with international standards, and I mentioned the challenge we have with ractopamine, is the Codex. The Codex is an international standard-setting body for food products, and excuse me. Excuse me, I'm surprised I made it that far without doing that. International standard-setting body for food products, but one of the things we've noticed is that when there is a new technology, such as ractopamine beta agonists that are developed, it takes a very long time to get them approved in Codex. Now, if that is just the scientific review, I mean, the scientific review has to take however long it has to take. But ractopamine went through the scientific review several times and kept being voted down. So the problem is that Codex, which should be a scientific review body, has turned into a political body in terms of its final decision-making. So we could envision within TPP that if say a certain proportion of the TPP members were to vote in favor of approving a standard at Codex, even if Codex fails to approve that standard because of non-TPP members, that we could apply that standard within the TPP region nevertheless. So I think, that's sort of, I know we're a little bit over time. Those were the thoughts that I had, and I'll just wrap it up there.